In October 2023, a Wall Street analyst told his clients that the next big losers from Ozempic were going to be gyms, specifically Planet Fitness. The stock had already crashed 30% that year. The thesis was simple. If a drug makes you skinny without exercise, why would anyone pay for a gym? 2.5 years later, Planet Fitness just added 1.1 million new members in a single year. Their CEO went to the earnings calls last February and said something that should have been impossible. She said roughly half of all GLP-1 users are now considering a gym membership. Half. So how did the drug that was supposed to kill the gym industry quietly become the best thing that's ever happened to it? Stay with me. The answer rewrites what a gym actually is. If you want the full numbers, Planet Fitness's $1.3 billion year, Life Time Miora rollout, all of it. The newsletter version of this video drops tonight. Link in description. Quick rewind. 3 years ago, Ozempic broke containment. For decades, semaglutide and tirzepatide, those are the chemical names, were diabetes drugs. Boring stuff. Then somebody noticed people were losing 30 to 40 pounds on them. By 2024, about 1 in 8 Americans had tried one. By the end of 2025, 12.4% of US adults said they were on a GLP-1 specifically to lose weight. That's per Gallup survey of 15,000 people. This was an economic earthquake. Restaurants started worrying. Snack companies started worrying. Hershey, Pepsi, Doritos, every consumer brand that sells calories started running scenario models on what happens when 50 million Americans just don't eat as much. And the loudest doom prediction was about the gym industry. The logic seemed bulletproof. Gyms exist because people want to lose weight. Ozempic does that for you. Skip the gym, take the shot. Wall Street took it seriously. Planet Fitness lost about a third of its market cap in 2023. Peloton was already cratering. The fitness industry was supposedly the next big short. Most people you talk to today still think this is the story. They'll tell you Ozempic is going to slowly hollow out the gym business, the same way Netflix hollowed out movie theaters. But here's what the actual filings show. Not the predictions, not the takes, the 10Ks and the earnings calls and the SEC documents. The exact moment Wall Street decided Ozempic would kill gyms was the exact moment gyms started making the most money they've ever made. And it gets weirder because the gyms didn't just survive, they figured out how to sell GLP-1s themselves. Let's go through the numbers and start with the obvious one. Planet Fitness, the company that was supposed to be roadkill. In 2025, they added 1.1 million net new members. Total memberships now sits at 20.8 million people across nearly 2,900 clubs. Per their February 2026 8K filings, system revenue grew 12.1% to $1.3 billion. Adjusted EBITDA, that's basically operating profit before the financial engineering stuff, went from 487 million to 551 million, up 13%. For context, this is supposed to be a dying industry, and there's the part that should be impossible. 2025 was the first full year of a 50% price increase on their classic card membership. They raised the price by half. Members didn't leave, they added more. Now zoom out. This isn't just Planet Fitness. According to the Health and Fitness Association, the trade group formerly known as IHRSA, the US fitness industry hit 77 million members in 2024. That's an all-time record, up 20% from 2019. Membership growth in 2023 and 2024 was the strongest 2-year stretch the industry has never recorded. Median revenue across surveyed operators grew about 10%. Median EBITDA margins hit 23.6%. This isn't a struggling industry. This is an industry having the best run in its history. So what happened to that bear thesis from 2023? Here's where it gets interesting. While most analysts in 2023 were panicking about Ozempic, one guy made a widely contrarian call. His name is Warren Chang. He worked at Evercore ISI. In October 2023, with Planet Fitness trading at $52.73, Chang put a $100 price tag on the stock, 90% upside. He told his clients 70 to 80% of new GLP-1 users would end up at a Planet Fitness. He was laughed at. Wall Street's consensus was the opposite. Today, Planet Fitness trades around $72. It hit $114 earlier this year. Even after a 2026 pullback, the stock is up roughly 37% from its 2023 lows. The contrarian was right. The consensus was wrong. But the actual story is bigger than one stock, because the question Chen got right wasn't really would Planet Fitness survive Ozempic. It was why would GLP-1 users want a gym? And the answer is biology. Here's the thing nobody told you about Ozempic when it went viral. When you lose weight on a GLP-1, you don't just lose fat, you lose muscle. Per multiple peer-reviewed reviews published through 2025, anywhere from 26 to 40% of the weight someone loses on these drugs is lean mass. That's muscle and other tissue. That's a problem because losing muscle wrecks your metabolism, hurts your strength, and basically guarantees you regain the fat the second you stop taking the drug. The fix? The only fix: resistance training, lifting weights. The European Association for the Study of Obesity now formally recommends progressive resistance training during GLP-1 therapy. A 2025 case series in PMC found that GLP-1 users who lifted 3 to 5 days a week and ate enough protein could maintain, sometimes even gain, lean mass while losing massive amounts of fat. So Ozempic doesn't replace the gym, it requires the gym. If you take a GLP-1 and you don't lift, you're gonna look worse, feel worse, and end up exactly where you started 6 months after you stop. And that's the math that broke Wall Street's bear thesis. But there is still one piece of this that should blow your mind. Quick thing: if you're enjoying this, the newsletter goes way deeper. Tonight's issue covers what Wall Street got wrong about gym stocks in 2023, the math behind Life Time's Miora clinics, and why Planet Fitness stock is down 40% in 2026 for reasons that have nothing to do with Ozempic. It's free, link in description. Last year, Planet Fitness announced a partnership with a telehealth platform called Ro. You may have seen the ads. Serena Williams is the brand ambassador, and she's also a customer. Ro's main business is prescribing GLP-1s. So a customer goes to Ro, gets a prescription for Ozempic or Wegovy or Zepbound, and then gets funneled into Planet Fitness through their perks program. The gym is now a downstream channel for the drug that was supposed to put it out of business. On the Q4 earnings call, the Planet Fitness CEO called it the most successful perks program in our history. It gets even more vertical. Lifetime, the high-end gym chain, didn't just partner, they cut out the middleman. They opened their own clinics. They're called Miora, and Miora prescribes GLP-1s and peptides directly to members. The gym is the pharmacy is the gym, and it's growing month over month. This is the part nobody in financial Twitter is talking about. The fitness industry didn't just survive Ozempic, it absorbed it. So here's where the open loop closes. Ozempic didn't kill gyms, because gyms aren't actually in the weight loss business. They never were. They were just planted that way for 40 years. Look at what people actually do at the gym in 2026 versus 2019. According to the Health and Fitness Association Consumer Report, treadmill use is flat, free weight use is up, resistance machine use is down, yoga is up, Pilates climbed to over 8% of members, personal training hit historical highs, almost a quarter of all members worked with a trainer in 2024. The modern member isn't trying to burn calories, they're trying to build their body, strength, mobility, recovery, longevity. That's a completely different business than the one Ozempic is supposed to threaten. And here's where the money flows. Planet Fitness's premium tire, the Black Card, hit 66.5% penetration in 2024, all-time high. Members are paying more for spa amenities, red light therapy, cold plunges, things that have nothing to do with cardio. The company's testing recovery rooms. Sound familiar? That's the Equinox playbook from 2010. Just $15 a month instead of $300. Now zoom way out. The clearest evidence that gyms are now metabolic health infrastructure, not fitness clubs, is the revenue per member math. At Lifetime, the high-end chain, average revenue per member is about $3,160 per year per the company's investor materials. At Planet Fitness, it's roughly $222 per year. Same industry, 14 times the revenue per person. That's not a gym chain versus gym chain. That's a healthcare adjacent business versus a low-cost subscription, and both are crushing it. The thesis, plain and simple: gyms aren't fitness businesses anymore. They're metabolic health infrastructure. They're the place where the GLP-1 user goes to keep their muscle, where the longevity-obsessed person goes for cold plunges and recovery, where the corporate wellness program funnels its participants. The drug didn't substitute for them, it made them load-bearing. That's why the bear thesis from 2023 was so wrong. It treated the gym as a calorie-burning facility, the gym had already moved on. Now, before you close this video thinking gyms are bulletproof, here's the wrinkle. Planet Fitness's 2026 outlook came in soft. Same club sales growth of just 4 to 5%. Some analysts cut their member growth forecasts. Why? Not because of Ozempic, because of the K-shaped economy. Lower income members are starting to strain. Meanwhile, Life Time, serving wealthier customers, keeps accelerating. The fitness industry survived the Ozempic war. It might not survive the income inequality war. That's the next story. Here's the thesis in one line. Every time consensus tells you a multi-billion-dollar industry is about to die, the answer is almost never simple. Sometimes the threat becomes the partner. So the question I want to leave you with, and drop your answer in the comments, is this. Do you think the gym of 2023 is gonna look more like a fitness club or more like a primary care clinic? Because right now, Life Time's Miora is collecting your blood work, prescribing your peptide, and putting you on a treadmill. That doesn't look like a gym to me. It looks like the future of healthcare. Alright. Two things before you go. First, the newsletter version of this video called Footnote Brief drops tonight at 10 p.m. It's the longer form written take with every number sourced and the contrarian wrinkle on why Planet Fitness's stock is actually down 40% this year despite all this. The link is in the description and pinned in the top comment. Second, if you have watched this far, you probably want to read the filings, not the headlines. That's literally what the newsletter does. 2 issues a week, free. You can unsubscribe whenever. Link in description and in pinned comment. If you want more stories where the numbers tell a different story than the headlines, subscribe. Footnote Brief. Read the filings, not the headlines.